and welcome to World Talks here on TVP World. My name is Diana Skaya. India and the European Union are reportedly close to finalizing a comprehensive free trade agreement, a deal shaped as much by geopolitics as by economics. And joining me now to break down what this could mean for Europe, India, and global trade is Hagemejer, macroeconomics and trade director at CASE and professor at the University of Warsaw. Thank you so much for joining us here on World Talks, Jan. So let me ask you this. Now, the EU is increasingly now engaging with both China and the EU, with both India, and with China. How do you think Brussels is actually balancing its economic ambitions with the geopolitical risks of actually deepening ties to these powers?
Well, I would say that in a world when everyone is, so to say, closing their borders, which is usually against their economic interest, as trade, brings prosperity and growth in most cases. The EU has no other choice but to seek trading partners and also potentially geopolitical, I would say, allies into bringing as much free trade as possible. So in a way, this is both an economic decision, but also to some extent a geopolitical decision to try to ally with both, or ally maybe is too strong of a word, to increase the ties with India and China.
But do you think that Europe is really seeking strategically? I mean, are there alternatives to the United States, given that everything that has happened in the past few weeks and months?
Well, I mean, it's difficult to replace the US because of the economic sizes. The US is either first or the second largest economy in the world. India is only 11th EU trading partner. Therefore, of course, the scale is much different. It's a different story with China, which is also economically huge and very similar in size in terms of the GDP to the US. But at the same time, India is growing very fast. It has a huge population and currently low income, and this population is growing fast. I mean, it's almost 1% each year, slightly less than 1%, which is compared to Europe, it's first of all a growing population rather than declining, and second, the economic growth is quite spectacular, and it's going to be quite spectacular over the next decades because of India catching up with the rest of the world. So. From an economic point of view, it's also a promising trading partner.
Let me ask you this. Canada recently signed a trade deal with China, really signaling a shift away from traditional reliance on the United States. How do you think Europe is looking at that move, looking at Canada? Do you think it could actually influence EU countries' own trade strategy and the way that they're going to move forward with this?
Well, I mean, the EU strategy has always been creating as big of a trade network as possible. The EU has numerous trading agreements. Of course, the latest Mercosur agreement, which is for some reasons that are quite unknown but to me considered controversial, that it is just one of many agreements that the EU already has, and they are bringing the trade barriers down. So in a way, well, it is sort of a strategy where you're looking for partners that can gain from the partnership with you, because otherwise it would be impossible to sign an agreement. And again, I believe that Canada is doing much the same with the tensions with the US. I mean, closing up has never proven to be beneficial for almost anyone in the, let's say, the history of the last 100 years.
Let me ask you this. With now the Mercosur trade agreement in focus, what opportunities and challenges would you say that Europe faces?
So, of course, with Mercosur, you have the whole focus on the agricultural sector and the food products, which are a very small part of the EU economy. Maybe not a very small part, but small in comparison to the other sectors that gain that will gain from the EU-Mercosur agreement. And also, of course, nobody talks about the consumer who would also benefit. They will be the main beneficiaries of the EU-Mercosur agreement. But when we turn to India, with India, these negotiations are not new. I mean, they sort of are on and off since many years now. And both parties, they have decided to basically completely abstain from this very sensitive sector. So this agreement doesn't cover agriculture at all. So we don't expect any major changes in trade in that regard. However, of course, there are some potential tariff removals for the EU wine, but other than that, agriculture is excluded. However, when we look at the other sectors, so the main sectors that would gain, these are the usual suspects: the car industry, the modern industries in industrial manufacturing, also some services. On the Indian side, we can for sure expect the sectors that benefit or rely from Indian low wages. That would be for sure the textile industry, and textiles are quite protected in the EU. So probably from the point of view of let's say heightened competition and potential for some competitive adjustment on the part of the European industry would be probably concentrated in the textile industry. Other sectors that could enter, where exporters could enter from India to the EU, would of course be the service sectors. India has a large service sector that is also competitive, but these are also to some extent sectors where in Europe it's difficult to find specialists and so on, like I don't know, call centers and so on, as well as, let's say, the remote accounting services and a lot of labor-intensive services that can be imported remotely. However, if we think about the service providers that would need to be physically present in the EU, of course, there are other considerations that are, the immigration laws and so on, that to a large extent limit, the huge inflow of let's say, physical service providers to the EU. So I would say that here it's not. I mean, if we consider in particular the EU economy, it is not. It is not, I would say, something that's a danger to the EU economy in any significant way. In particular, because the Indian economy is smaller than the German economy, and therefore the difference in sizes also means asymmetric gains.
Let me just
asymmetric increase in trade. Mm-hmm.
Let me just cut you off for a moment, though. With everything you're saying, I want to know, what do you think about Poland's role here? How would you say that Poland will benefit from all of this?
Yes. So, I mean, first of all, when we look at the consumers, the consumers would benefit all over Europe, and this would be to a large extent the same sort of gains. In particular, this would mean potentially lower prices for these products where the EU industries are not very competitive because of high wages. That would mean, in particular, the textile industry, the footwear industry, and so on and so on. As far as production industries are concerned, well, India would be well. First of all, the EU manufacturers, in particular the multinationals that originate from the EU and operate in the EU, they are outsourcing a lot of their activities to China, for example. And of course, we know that this is to some extent risky in a way that you shouldn't rely on one partner. So this would, for example, show some opportunities for diversification of the value chains. So manufacturing industries, starting from electronics, pharmaceuticals, and probably to motor vehicles and buses, trains, and so on. They could move some of the production facilities or create new production facilities, not only to support the EU economy with cheaper components, but also to serve the Indian market. From the Polish point of view, of course, we know that the automobile industry is providing. I mean, if you take into account all the supporting industries like metal products, electronics, rubber industry, and so on, this would be around 40% of the Polish manufacturing. So for sure, these opportunities to use the value chain that is partially located in India would also allow the Polish industries to move into higher parts of the value chain in those
just before I let you go, because I'm almost out of time here. In just under 1 minute, I want to ask you what you think about the following. I mean, Tuesday will mark the first year of Donald Trump's inauguration. We all remember that. Now, after years of confusing, messages and mixed signals, the constant backtracking, do you think that, I mean, we're talking about economy here, that markets have actually got used to this kind of behavior from Donald Trump and from the White House? How do you see it?
Well, maybe, but to some extent, you don't know what are the bounds for this uncertainty. So it's completely unpredictable. And I don't think any market can expect what is likely to happen. So yes, we are going to observe a lot of turbulence that will be caused by Trump and his policy actions.
Thank you so much, Jan Hagemejer, Macroeconomics and Trade Director at CASE, for being with us here on World Talks.
Thanks a lot.
And thank you for watching this episode of World Talks on TVP World. I'm Diana Skaya. We'll see you next time.